Good morning, everybody. Could you please come on in and take seats closer to the front? Lights are a little blinding in here, and I'd like to see everyone's face. Right there. Okay, we're going to start in about 2 or 3 minutes, so I'd appreciate it if people would start to make their way in towards the front. We will not give you grief if you have to get up in the middle and leave for something, so don't be afraid to come towards us. We're just finishing up a few items here, and we'll begin in a minute or so. I invite you to please come as far forward as you feel comfortable with. A little bit more intimate than the general sessions. Ready? You right? I know. Well, good morning, everybody, and welcome to the Copper Spotlight for 2016. It's an honor to be here. My name is Randy Goodman, and I work with Greenland America Trading. Today we have a distinguished group of speakers and people for our panel, and I'm going to introduce them individually in a minute, but just most of you are aware and know most of the people up here. Joseph Pickard from ISRI, our economist. Brian Shine from Manitoba. Adam, everybody knows Adam Minter. They read his stuff all the time. And then Amy Krebs is the new face on the block, and Amy works with the Department of Commerce. So without further ado, we're going to start with Joe Pickard today, because Joe's going to just introduce a few concepts to us and talk to us about the things where things are and where they could go and what to think about during the course of the presentations. Hopefully it'll give you the opportunity to think of some questions, because for the last half hour we're hoping we can have some good dialogue back and forth about where copper's been, where it might be going. Now I will say right off the bat that we do have to take into consideration all antitrust issues, but the great news is that we have 3 panelists here who don't really have skin in that game, so they can talk about whatever they want to talk about. Myself and Brian will have to plead the fifth and won't say anything that we shouldn't be saying, because Scott Horn is still here. And when he leaves, there'll be somebody else like him. So most of you know Joe Pickard, Joseph. He is the chief economist and director of commodities for ISRI in Washington, D.C. Previously served as an economist at the International Copper Study Group in Lisbon, Portugal. So without further ado, Joe Pickard.
Thanks, Randy.
Sure.
Oh, you don't have to applaud. Thank you, though. Good morning, everyone. It's great to see you here. It's great to see such a wonderful turnout, not just for the spotlight for the convention, especially given the challenging market conditions that we've certainly all been experiencing for the last year or more. Things have been difficult enough, it seems like, without the opportunity to take advantage of some of the things that our members are really focusing on today, which kind of reminded me of an old joke, which you may have heard already. It's about a guy named Joe, coincidentally enough, who's having trouble with his business world. His company's struggling. He's struggling to make payroll. And so he prays to God and says, God, I really need some money. Can you please let me win the lottery? So the lottery drawing comes and goes, and Joe doesn't win. And things start to get even worse for him. He's accumulating personal debt. The bank is threatening to foreclose on his home and his car. And the lottery's coming around again, and he says, Lord, I really need your help. Can you help me win the lottery? The lottery drawing comes and goes. Joe doesn't win. So finally, Joe's getting desperate. He's having trouble putting food on the table, and the lottery drawing's coming around one more time. And he's pleading to God, God, please, I'm begging you. You got to help me win this lottery. And finally, God can't take it anymore. And he says, Joe, you got to meet me halfway, at least buy a lottery ticket. So I think a lot of experiences today that's difficult enough to deal with this marketplace. But I think there are some things that our members can be doing that can be improving their odds of success. And I think we've got some great speakers today who can talk a little bit about some of their experiences and their views. There are things that are in our control, and there are things that are outside of our control. You know, copper scrap dealers do not control where copper prices go. But there are things that we can do to hedge that risk to copper price volatility. And I'm excited that Brian Shine will be able to talk a little bit about his experience with his company and how they're addressing that risk. Certainly, copper scrap dealers aren't in control of the supply of scrap, especially when prices come down, as we've seen in the recent months. We don't control demand from China either, or from other overseas markets. But I think things that we can do are be informed about what's really going on in China and plan for that based on realistic assumptions about Chinese growth. And so I think it's great that we're going to have Adam Minter here today, who can really give his insights as to what's going on in China currently. And then finally, we all realize that China has slowed down. There's a need to develop new markets overseas. And I think as we look at ways to develop those new markets, we're very fortunate to have Amy Krebs from the Commerce Department here to talk about the trade promotion activities that the Commerce Department can provide as we look to develop those new markets overseas. So I just want to go quickly into what we've been seeing in terms of prices before I turn it over to Brian. Certainly this will come as no surprise to any of you, the downward trend in both refined and copper scrap prices over the course of last year. From a peak of around $2.90 in May, by the end of the year, copper was trading around $2.10 on the COMEX. For the year to date, we've seen a little bit of a bounce in copper prices on the LME. This is through April 1st, year to date. Copper prices were actually up about 3%. We've seen a little bit of shakeout this week. But again, most of the non-ferrous prices were in positive territory year to date through April 1st, and copper's kind of in the middle of the pack. For the month of March, however, copper actually had the best performance amongst LME prices. LME official cash and 3-month prices were up about 7% just in the month of March, with cash trading on average about $2.24 a pound. Again, the best performance amongst the major base metals. But we continue to see volatility within the pricing sector. Goldman Sachs is especially bearish on prices. They've recently doubled down on their price forecast that copper prices will only average $4,000 a ton both this year and next year. Their initial $4,000 price forecast they announced was for average prices. Today, Goldman Sachs is saying that is their bullish case scenario, that copper would average $4,000 a ton this year and next. So bearing in mind all that price volatility that we've been seeing and the difficulty that scrap processors have in dealing with that price volatility, I want to hand it over to Brian now, who can talk a little bit about his pricing experience. Brian?
Thanks.
Thanks.
Is this coming up? There we go. Whoops. Okay. Hello, everybody, and welcome. I hope you're enjoying the convention so far, and I appreciate the opportunity to speak with everybody today. Actually, before I begin my remarks, I want to say that this presentation may come off as an infomercial, but that is not the point at all. I just want to share with everybody some of the factors and elements that have been critical to our success and allowed us to celebrate as a company 100 years in business, which is taking place this year in 2016, and we're certainly excited about that, although it's on to the next 100 as far as I'm concerned. So as Joe talked about, one of the elements, of course, is in mitigating risk, putting things within our control and our ability to control. And there's not a lot of elements that we have much control over, but the use of hedging as a tool is one that we've deployed very successfully. And so that'll be one of the themes throughout the presentation. So to give you, again, a little background, we're celebrating 100 years, as I mentioned. And the last 45 years, we've had a primary focus and emphasis on copper. As we started in the business, my great-grandfather started the business in 1916 in Buffalo. Same story as many of you in the room, with a push cart, and was walking around city streets, literally recycling anything that he could. And he and my grandfather, who actually went to law school at the University of Buffalo in 1932, ended up joining his family business after about 7 years of practicing law. And they built it up to be the largest rag recycler in all of New York State. But after World War II, with the advent of synthetic rags, nylon, Decron, rayon, and so forth, rag recycling started to decline precipitously, and we shifted gears to metals. At that time, Buffalo was a very industrial town, and so there was opportunities within metals. We intentionally did not turn to the ferrous markets. It was well saturated in Buffalo at that time, so we began an emphasis on non-ferrous metals, and as I said, the last 45 years or so, it's been a strong focus and emphasis on copper. Went through that. Today, we operate a modern recycling plant in Buffalo, as well as in St. Louis, Missouri. So those are our two physical plant operations. Joe was kind enough to prepare this timeline for me, thank you, Joe, to mirror our 100 years in business. So the chart starts in 1916 and it goes through almost the 100-year period. And this is representing purchased new copper scrap in the U.S. over that period of time. So that's metric tons, demonstrated in metric tons. The next slide is an interesting one, of course, as well, and that's the average price over that, again, roughly 100-year period. And in 1916, did you actually get the figure? Okay. So you can see it's at the far left end of the screen and very low. And actually, for most of that period of time, it's relatively low until, of course, as we all know, the history of copper in recent times. I've had a 30-year career in the industry at this point. And for the first 20 or so years of my career, copper ranged basically between 70 and 90 cents a pound, and that was our basic trading range. There were times where it was lower, of course, and times where it was a bit higher than that, but by and large, it was in that range. And then we experienced what we all experienced in this room in more recent times, and now we're on at this point, the downside of that. And who knows where we're going, but that's the chart through that time. These are published copper scrap prices in the Buffalo market. Again, Joe was kind enough to point to that slide because of the Buffalo piece, of course. So you can see what's happened over, this represents from 2015 through March of 2016. So again, I mentioned the tool for mitigating risk that's worked extremely well for us. About 40 years ago, as we started to really emerge in the copper side of the business, our largest customer came to us and they taught us a valuable lesson, as it says, and it's the old classic, you will or you won't. You will learn how to hedge and use that as a tool, or you will not be our supplier. And the reason that they came to us and approached us is that they didn't want to hear the old story about, truth or story, that the market's gone lower, I can't afford to sell you, or I don't have the material. And so they knew that at that time that hedging was the tool that would allow us to sell and buy in any market condition and be there to perform for them as a supplier. So we took that to heart and taught ourselves to understand the sophistication associated with hedging has grown thanks to that customer, and they're still a customer to this day. So it was a worthwhile investment on our part for sure. And actually, I believe that that's one of the key elements for us, for our company, that has worked to allow us to celebrate 100 years. So for us, the value of hedging can be described as a differentiator to some of our competitors who don't use hedging. And again, it allows us to, well, going to the third point, it allows us to be opposite the old axiom of buy low and sell high. And almost never does that happen to us. In most cases, our suppliers are contacting us when the market's moving up, and our customers are contacting us as it's moving down. And it's partly for speculative reasons. Suppliers tend to want to hold inventory and take advantage of up days, and consumers in some cases are looking for dips as they go to buy. So if we weren't employing hedging, especially in the margin environment that we all find ourselves in, we would be upside down in most physical transactions. So we think it's a valuable tool for us to have achieved this milestone, and we look forward to the next 100 years and this being an element of that. So some strategy required as you think about this, and again, this isn't a hedging seminar per se, that's much more involved, but you have to consider what month to be hedged in, of course, when to start transitioning or rolling to later months as you exit. Because in our case, we buy and sell copper futures. We never take or make delivery with an exchange. We're always out of the position prior to the month. But there's some strategy associated with that. And then learning all the various methods for customer supplier requirements. As many people in this room certainly know, I know I'm preaching to the choir here, but there's intricacies about when suppliers want to price or customers want to price. Sometimes it's determined ahead of time, date of shipment, or date of receipt, or whatever first day of the month. Everybody's got their own nuances as to when they want to price, and it's important, of course, to understand and execute accordingly so that you don't find yourself on not having hedged when you were supposed to, et cetera. It's allowed us to, over time, because of the expertise that we've developed, to offer customers and suppliers advice associated with hedging, not from a speculative perspective, but from a mechanics perspective. We can take that burden away from them by taking the physical goods and allowing them to continue to speculate or whatever their price drivers are by us holding the physical, turning it, and moving it on, but keeping a paper position, in effect acting as their broker. The other thing that allowed us to do over time was develop a custom program to cover our hedging, so that it's an access-based program, and it's a really interesting program that was developed over time. When we first started, it was literally a 3-ring binder, and we called it our copper book, and we managed all of that activity physically entering. And as time went by, we custom developed a program, and so we use that for every transaction, and it's a very robust program. It allows us to develop profit and loss statements and obviously know our position at any point in time. So a summary of the benefits: allows us to buy and sell in all market conditions. It differentiates Manitoba from some of our competitors. It's a cornerstone of our strategic plan to grow the business. Again, it's one of the risk factors that we can control. And it's a very inexpensive insurance to protect against market movement. And that is it. So thank you.
Thanks, Brian.
Oh, thanks.
I'd like to thank Brian Shine. As most of you also know, he's incoming chair-elect for ISRI, so he's playing multiple roles at this point and doing a fantastic job at it. I also would like to add that some people think when they hear the word hedging, they think that it's gambling. Okay, and where he said it's either in or out, or you're right, you do it or don't do it. Hedging's one of those things, like going to the blackjack table and you see that extra side bet, and I think they call it the sucker bet. The sucker bet isn't always a sucker bet if you play it every time. But if you're going to go in and out, don't bother. Okay, hedging is the same thing, and it's something that needs to be done either all in or not at all, because if you're just going to come in and hedge this buy or that sale, then all you're doing is gambling. And that's an important distinction. It is to minimize risk, because when copper has fallen from $4 a pound down to $2 a pound, the spread on number 2 has probably only moved about 10 to 15 cents. So do you want to risk the market, or do you want to risk the spread? It's really not that difficult, and most of the people you work with or trade with can help you with the hedging part of it. They might even do part of the hedging for you by giving you the opportunity to sell on open pricing. So please take advantage of that, because it is all about minimization of risk when it's hedging. Next, we're going to have Adam Minter, and I believe all of you know Adam or have read his stuff. I've had the privilege over the years to travel a lot around Asia with Adam, and we have a lot of stories that we can't share at this moment. But if you read his book, a few of them are in there. Adam is a columnist with Bloomberg View, based in Kuala Lumpur, Malaysia. I won't get used to that one. Where he has lived for the last 2 years. Over the course of a decade plus living and working in China, Adam wrote for a wide range of publications, including The Atlantic, National Geographic, Business Week, The Wall Street Journal, the LA Times, Foreign Policy, and others. Since 2001, he has been a regular contributor to Scrap Magazine, reporting from international locations such as China, India, Ghana, and believe it or not, Sumter, Wisconsin. In 2012, he published his first book, Junkyard Planet, Travels in the $1 billion Trash Trade, a best-selling, critically acclaimed look into the global scrap industry. My friend, Adam Minter.
Thanks, Randy, and Joe, thanks for inviting me, and thanks to everyone who comes here at 11:30. There's other places you could be, like the plastic surgery convention down the hallway. I'm glad you took the right turn and joined us instead. So this is going to be fairly short, and it's going to be fairly bleak because, to be perfectly frank, my outlook on Chinese demand for copper is not pretty. What I want to talk to you about is what is the actual demand for Chinese copper. Right now, the figure that we see circulated is that China accounts for about 46% of copper demand worldwide, and there's been, especially over the last 5 years, some questioning as to whether that's true. And the reason there's been the question is we have what's called the carry trade. It's a financing deal, and I'm sure many of the folks in here have heard of this, but basically the idea is you're a Chinese trader who has access to copper. You use that copper as collateral to buy dollar assets, to buy dollar assets that you then convert into high-yielding Chinese renminbi. It's basically arbitraging dollars versus renminbi using copper as collateral. It's a very, very popular trade. We don't know how popular. It's been a big question over the years, but you can meet a lot of people in China who do this, and they don't necessarily report it. So I had some colleagues at Bloomberg who wanted to get to the bottom of this, and they wanted to find a way that we could actually measure how much of Chinese copper demand is just people collateralizing it to make these very lucrative deals, and how much of it's actually being used. And what they decided to do is they looked for some kind of commodity, some kind of material that sort of correlated closely together. And what they decided was, we can look at the construction industry, and copper demand and cement demand is, there's going to be some correlation there. The nice thing is it's very hard to collateralize a bag of cement. So if cement demand is going to be real demand, whereas the copper demand may not be. And this chart that you see right here is very interesting. It's very simple, and all it shows you is that there's in the construction industry, the cement demand hasn't quite met the growth of copper demand. So between 2011 and 2015, cement demand on a per square meter basis in construction is up 11%. Copper is up 117%. So something's not right there. There's a lot more copper going into buildings as a percentage on a square meter basis than what you have going on with cement. So there's a gap there. What does that look like in financial terms? So you can see here, this is quite an interesting piece. And again, this comes from Bloomberg. And I think it's fairly self-explanatory. And if you spend time looking at these markets, you can see that LME copper and the exchange rate between the dollar are fairly closely correlated. And what that means is that you can fairly well guess what's going to happen to the LME copper price based upon the exchange rates. That is to say, there are some fairly definitive movements happening, not because of demand, real demand in China. It's happening because of interest rates, and you have this financing trade, these carry trades, this arbitrage between the two different currencies. This is something, again, another chart out of Bloomberg. The questioning whether, what we have going on with the Chinese renminbi and the Shanghai copper deliverable stocks, whether people are actually placing wagers on CNY Chinese renminbi devaluation rather than thinking, again, in terms of what real demand is. And this is very tricky because you have to ask yourself then, how much copper is actually being pledged, how much of the demand is being pledged, is representing this demand. Again, you can see here we're seeing a big jump in the deliverable stocks, and there's no real reason for that except you have a lot of devaluation happening in the renminbi. Well, what these analysts at Bloomberg Intelligence figured out is you're talking between 2011 and 2015, the buildup of about a 15.5 million ton bank of copper in China, copper moving in many cases from the LME into Shanghai warehouses, that's doing nothing. It's just it's doing something. It's serving as collateral for these financing deals. But if you look at it that way, there's something very serious going on here. Instead of China representing 46% of global copper demand, it's actually, under this scenario, representing about 35%. So that's a big difference. And when we think about where copper is going over the next few years, we've got to think about how all this stuff in the warehouses gets unwound. And I'm not sure what the answer to that is, except time. So to say that, at least in a Chinese context, that I'm slightly bearish on it, is probably an underestimate. That 15.5 million ton gap is very serious, and it's going to impact anybody who deals in copper here. Just a couple of other quick observations. I thought this was interesting. This was given to me the other day. These are new mines coming online over the next couple of years. I'm just talking and the copper production cost per pound, it's a little frightening. The new mines coming online, they're averaging about $1.40 per pound for production costs. That's not a very bullish figure. And what's very interesting about these is a number of these are actually Chinese invested mines. So you have, again, China theoretically creating some very uncomfortable circumstances that are going to keep, I think, prices down for a while. And I don't know how you unwind these new mines except you exhaust them. Are there any reasons for bullishness? Well, we all hear that China is shifting to a consumer economy, and that's true. And you can see some correlations, again, another Bloomberg chart, between auto sales in China and copper demand. But it's important to realize that this, on the consumer side, it's not going to replace, at least at this point, the infrastructure that drove so much of the Chinese economy for so long. Automobile represents about 10% of copper demand. So there's still, a lot of room to go. There's a lot of room, a lot of copper demand to fill if we're going to get back to any kind of the levels that we saw prior to the collapse here. And this is something that I find very interesting as well. There is quite a bit of energy investment going on in China right now. This is a renewable energy investment. In years past, we might think, well, this would be very good for copper. But these renewable energy investments are a big part of those are high voltage direct current lines, and instead of using copper, they're using aluminum. And we know that this is something that's going on around the world. So if you're looking for hope, if you will, from energy investment, from the renewable boom in China, there's certainly going to be some demand. But again, that demand is actually probably going to be much more positively correlated to stainless and aluminum than it is to copper. So I'm going to wrap this happy presentation here and leave the good news to Randy.
Well, those of you who know me, I cannot help but to think when Adam starts out his speech and he says that he will be fairly short, I kind of say he already is, so he was. We're going to go back to Joe, and we're going to talk a little bit more about the economy and the economics of copper and where it's been and where it might be going. I think it's interesting to say, Joe's been with us how many years now? 5 years. And he had really big shoes to walk into. His predecessor was a giant in our industry, and he was all of our friends. Joe has a really interesting perspective on stuff because Joe is economist, and he wasn't around our industry before, and he's given us insight in a different way than we've ever been presented before. And he's involved in different committees and different institutions around, like what he works with Amy. So I think he really brings a lot to our table, and we're really pleased and proud to have him here to be able to give us these types of things. So no further ado, we're back to Joe.
Okay. Thanks, Randy. I'll take that unique perspective as a compliment, as being a good perspective. Okay, good. So just to sort of build a little bit on what Adam was saying and sort of transition into some of the trade topics that Amy is going to cover, just wanted to pick up from where we left off on the Goldman Sachs outlook. Again, they're forecasting about $4,000 a ton average prices for copper this year and next. Part of the rationale for those forecasts include the final statement on the screen, which says, overall, we find that the likelihood of a sustained improvement in Chinese demand during 2016-2017 is low. I think Adam would tend to agree with that, and maybe stretch that out a little bit further. Taking a look at the supportive factors for copper prices in March, where we saw prices increase 7% month on month, has been an increase in money managers' copper positions at the LME, expanding the net long positions, in part response to the slipping dollar that we saw in recent weeks, where the euro was trading around $1.14 or 5 or 6 month highs. Shifting sentiment on China, whether it's well-founded or not, following some of the policy statements about their commitments to growth. Certainly expectations for supply cuts within global mined copper in response to the current pricing environment, and a slight uptick in investor sentiment with respect to commodities overall. Just going quickly through the overall overseas trends for copper scrap. Again, this is not necessarily pretty information, so we'll try to get through it quickly. But according to the Census Bureau trade data, our copper scrap exports from the U.S. declined 9% by volume last year to about 955,000 metric tons. Given the price drops that we saw in copper last year, the fall in export sales in dollar terms was even more pronounced. Total export sales of copper and copper alloy scrap in 2015 came in at about $2.8 billion. That's down from about $5 billion in export sales in 2011. So quite a significant drop every year since 2011. China, of course, was the major driver in that decrease. Among the major market losses, mainland China was the largest, with a volume change of about 65,000 metric tons less copper scrap we shipped to China in 2015 than in 2014. We saw some market losses in other major destinations as well, including some in Europe, including Germany and the Netherlands, and to Hong Kong as well, which is treated as a separate export destination as compared to mainland China. It's not all terrible news. We did see some markets that increased in terms of overseas demand for copper scrap last year, particularly our neighbors to the north, Canada. We shipped about 4% more, or 67,000 metric tons of copper scrap to China. Again, we saw some improvement in some European markets, including Austria, Belgium, Italy, and the Slovak Republic. As I said in our non-ferrous division meeting earlier this week, I don't know that of a lot of copper scrap exporters who are building their business model around increased trade with the Slovak Republic, but we'll take good news where we can find it. Other markets where we saw some growth last year included in Asia, in particular Vietnam and Malaysia as well. Maybe do we have you to thank for the Malaysian import increase? Yeah, maybe not. Okay, so then just quickly looking at the domestic trends, been pretty flat in terms of copper demand here in the U.S. in recent years. Total purchase scrap of copper, new and old, according to the U.S. Geological Survey, was pretty flat, up about 1% to 830,000 metric tons. That was eclipsed by the 3% increase in demand for refined copper here in the U.S. last year. Again, brass mills are going to make up the vast majority of demand for copper scrap here annually. USGS reports in 2015 that brass mills accounted for 79% of all copper scrap consumption here, followed by the ingot makers and copper refineries at 15%, foundries and other miscellaneous plants at 6%. Again, copper scrap consumption in the U.S. has been relatively stable in recent years. The pricing has certainly had an impact on copper supply, and I think the outlook for the U.S. economy going forward is consistent with pretty flat copper demand in the out years. The Federal Reserve is expecting real GDP growth this year of just 2.1 to 2.3%. That's actually down from the 2.4% growth in 2015. They're expecting a slight improvement in unemployment and continued low personal consumption expenditure price inflation. Looking quickly at global supply and demand expectations, the International Copper Study Group is actually expecting a supply deficit in 2016 in terms of global refined copper output. They expect demand for copper to exceed supply by about 56,000 metric tons. All other things being equal, that would be supportive of prices, but we also have to keep in mind that copper is about a 20 million metric ton global marketplace, so 56,000 tons is relatively minor given the overall market's size. Just a quick recap of where the IMF is expecting global growth to be. For 2016, the IMF is expecting global growth to increase to about 3.4% from 3.1% this year. That's mostly on the back of improving developing economy growth. Certainly not expected to be a result of increased growth in China. Make what you will of the Chinese GDP figures, but as far as the International Monetary Fund is concerned, they expect growth to slow from 6.9% in 2015 to 6.3% in 2016. We talk a lot about China, and there's a pretty good reason for it. If you look at this chart, we can see the just remarkable increase in overseas demand for all scrap commodities from China. Between the years 1989 and 1999, the U.S. shipped about 9 million tons of all scrap to China over that decade. Between the 14-year period 2000 to 2014, we shipped over 210 million tons of all scrap materials to China. So it's hard to overestimate just how important China is and why we continue to talk about it so much. But certainly we've seen mixed signals on China recently. Although we saw an increase in China's unwrought copper and semis imports in February and a 25% increase year to date, copper scrap imports into China continue to decline. Again, as Adam alluded to, there are certain concerns about the volume of copper stocks in Chinese bonded warehouses. According to Macquarie, Chinese bonded warehouse copper inventories increased by about 80,000 metric tons just from the middle of February to March, bringing them to about 470,000 metric tons, which is now the highest level since September. And we continue to see the divergence between stock levels at the LME, where stocks have dropped below 150,000 tons, and stocks at the Shanghai Futures Exchange, again, where stocks continue to mount. On top of all that, we see mixed figures on Chinese manufacturing. While we saw a slight uptick in the official reading on Purchasing Managers Index for China, increasing to 50.2 from 49.0 in February, which is slightly above that level that separates expansion from contraction. Other readings on manufacturing PMI continue to show sub-50 levels, like the Caixin manufacturing PMI, which, although improving, is still down around 49.7 in March. Okay, so that's a recap of what's going on here and what's going on overseas. Some things to think about as we move forward, both with this discussion and as you move forward with your business decisions. Certainly, there are a few analysts who are expecting a sudden V-shaped recovery in prices. Most analysts are expecting commodity prices to stay lower for longer. But I think as we've seen primary prices come down, that certainly had an impact on obsolete scrap flows, which could help underpin the market. Although ICSG is expecting a global market deficit for copper in this year, I think we continue to need additional cutbacks in global primary commodity output, not just for copper, but for oil, for iron ore, for a whole range of commodities where we're still producing way too much given global demand levels and demand in China. We certainly need to develop new markets given what's going on in China, and I'll come back to that in a second. But as we talked about at the very top of this program, I think there are things that are outside of scrap processors' control, and there are things within scrap processors control. Prices, certainly we can do very little about without hedging. But I think on the operational side, we continue to see our members making improvements, not just on the safety front, but on operational efficiency, on quality, and as they continue to diversify the products that they're dealing with. That commitment to improvement continues to lead to targeted investment. I would say targeted, not necessarily some of the large equipment that we've seen purchased over the last decade, but certainly equipment investment in sorting and separation technologies, as we see by the demand and activity on the expo floor here at the convention this year. It's important to keep in mind, of course, that this is a cyclical and evolving industry. And I think there's no question in my mind that the best days for the scrap recycling industry lie in the future. We have these challenges to face today, but even those challenges give ISRI and our members an opportunity to educate people, including policymakers and the public, that our industry remains vibrant, regardless of what New York Times reporters say or others in the press might indicate about how weak our economy, our industry is. Because let's face it, scrap recyclers are resilient, they're innovative and entrepreneurial, and I think we're going to continue to find ways to improve going forward. And part of that includes developing new markets overseas. Will they take up all the slack in the downturn in China? Not right away. But I think it's important to continue to try to develop those markets. And on that note, we're going to turn it over to Amy, who's going to talk about some of the things that commerce and the government can do to help us develop those overseas markets. So Randy, do you want to introduce?
Yes.
Thanks. Thanks very much.
You know, we have a choice in our industry of being proactive or reactive. I think in the years past, and 20, 30, 40 years ago, a lot of times our trade association might have been more reactive in nature, and we got hit in the face a lot of times with things like Superfund and some of the other items that have come upon us. Over the last decade or so, I've seen ISRI really turn that page totally around. And what we've done is we work with a lot of organizations. It used to be a joke that when somebody like Amy says, I'm here from the government and we're here to help. It's really no longer a joke. We are working with organizations like OSHA. We're working with the U.S. Trade representatives. We are working with the Department of Commerce. And it's those types of relationships that we've built over the last decade or so that are enabling us to take the next steps into ISRI's future and your future. Amy Krepp is an environmental technology trade specialist in the Industry and Analysis Office of Energy and Environmental Industries at the U.S. Department of Commerce's International Trade Administration. Her portfolio includes the air pollution control and monitoring industries as well as waste and recycling sectors, as well as the waste and recycling sectors. In her current capacity, she also coordinates the U.S. side of the U.S.-China Environmental Technology Working Group, the U.S.-China Environmental Industries Forum, and the Environmental Technologies Environmental Technologies Group. Amy has served at the International Trade Administration since 2012, when she began covering market access and policy issues across a variety of sectors, including environmental technologies as part of the Office of China and Mongolia. She holds a BA in Asian Studies from Carleton College and a graduate certificate in Chinese and American Studies from the Hopkins Nanjing Center, and an MA in International Relations focusing on China and Southeast Asia from the Johns Hopkins University School of Advanced International Study. Please welcome Amy.
Good morning, everyone. Today, I'd like to give you a brief introduction to the universe of programs and services that the U.S. government offers to support U.S. exporters, focusing on the ones that are particularly relevant for environmental technologies and solution providers. First, I'd like to highlight the U.S. Commercial Service because it's primarily how the U.S. government supports U.S. companies abroad. The U.S. Commercial Service is the trade promotion arm of the U.S. Department of Commerce's International Trade Administration. The Commercial Service supports American businesses with inherently governmental and trade promotion activities, such as trade counseling, including assistance with planning and strategy, legal and regulatory issues, documentation and product requirements, trade finance and insurance, market intelligence, business matchmaking, and advocacy and commercial diplomacy. The Commercial Service also connects international firms to U.S. suppliers by helping locate U.S. products, services, and business partners, and facilitating face-to-face meetings for suppliers and partners. Utilizing a network of trade promotion and policy professionals located in over 75 countries and more than 100 U.S. cities, the Commercial Service promotes U.S. exports, advances and protects U.S. commercial interests overseas, and attracts inward investment into the United States. More information about the Commercial Service, including locations and contacts for domestic and overseas offices, can be found online at export.gov. Export.gov provides resources for companies who are searching for information about the basics of exporting, as well as trade events, export finance, tariffs and taxes, trade data, and more. It also serves as a portal for U.S. and foreign companies operating in the United States to better connect to the different types of services offered by the U.S. government. Contact information for local and regional Commercial Service offices, including U.S. Export Assistance Centers across the United States, as well as for the commercial and economic sections at U.S. embassies and consulates around the world, also can be found on export.gov. Additionally, export.gov hosts the Environmental Solutions Exporter Portal, and you can see a screenshot of the portal right here. And I'd like to draw your attention to the upper left-hand corner of the page, where you will see the Exporter Resource Guide and a list of exporter services, including those for small businesses and new to exporting businesses. There are also links to market research and trade and project finance information, and there is a link to the Environmental Solutions Toolkit, which I'll introduce to you in a minute. There's also an opportunity to connect to a specialist and a real person on the other end of the line, depending on your area of interest, if you can see in the upper right-hand corner of the screen. And we also use the portal to promote upcoming events and activities, including trade shows and business-to-business matchmaking. The Exporter Portal also serves as a one-stop shop for the variety of programs and services that the U.S. government offers, depending on your company's size and type, as well as the type of assistance you need. Links to the many of the relevant U.S. agencies can be found on the portal as well. You can see some of those agencies and the types of programs and services that they will assist with here in this handy chart. So I mentioned the Environmental Solutions Toolkit earlier. While the audience for the Environmental Solutions Exporter Portal that I just introduced on the previous slide is predominantly U.S. environmental companies, the International Trade Administration and the U.S. Environmental Protection Agency have developed a web-based tool that can be used by foreign environmental officials and end users abroad to support environmental capacity building in addition to trade promotion efforts. And this is the U.S. Environmental Solutions Toolkit, which I think is, yes, here on this slide, which is an interactive online buyer's guide that combines U.S. EPA expertise on solving environmental challenges with a catalog of U.S. providers of related environmental technologies. The toolkit provides users access to information on EPA rules, technical research, and other information, along with the names of U.S. companies that provide technologies underpinning those environmental protection approaches. So it serves as a one-stop resource targeted at foreign government officials and international buyers of environmental technologies. And the toolkit aims to strengthen the international visibility of U.S. companies that are interested in increasing their export opportunities. Currently, it contains a list of U.S. companies that provide technology solutions for 12 different environmental issues in the areas of air pollution control, waste and wastewater treatment, and waste management. And additional environmental issues will be added later this year. Companies of all sizes that manufacture or produce environmental technologies in the United States may be listed on the toolkit. Participation is free. There is an online registration process, however, after which companies are vetted, and then if they meet our criteria, can be included in the database. We're also developing a mobile app version of the toolkit that can be accessed on or offline, which I personally think is pretty progressive for the U.S. government. We're only, about 10 years behind everybody else. Another resource for U.S. companies is the Top Markets Report. The International Trade Administration's Top Market series is meant to help U.S. exporters determine their next export market by comparing opportunities across borders. Each report ranks future export opportunities within a particular industry based on a sector-specific methodology. The reports provide a detailed assessment of the competitiveness landscape within a sector, as well as the opportunities and challenges facing U.S. exporters in key markets. And the Top Markets Report for Environmental Technologies, which you can see here, covers the three major environmental media, which are air, water, and waste and recycling, and ranks overseas markets that are large and growing in absolute terms, that have a defined and increasing need for imported technology and services, and they are places where U.S. exports are lower than predicted based on other markets with similar characteristics. And then we further filter the rankings to adjust for mature markets that are already large, open, and boast a relative ease of doing business, which is the reason why you don't see Japan or Canada or the EU and other similar countries on this list. The final result, though, is a list of large and growing markets where the scope of opportunity is countered by the presence of policy or other barriers. These are the markets where U.S. government policy and promotion activities have the highest potential for impact relative to the U.S. government resources we have available. And the 2016 Environmental Technologies Top Markets Report, which is due out later this year, will rank 50 markets and highlight 10 as indicated on this slide. We're also planning to include regional supplements for parts of Southeast Asia, Latin America, and the Gulf region. And if you just can't wait to read the 2016 report, the 2015 version is available for download at trade.gov/topmarkets, and it's still pretty relevant. Next, I want to briefly mention the Advocacy Center. The Advocacy Center's mission is to coordinate U.S. government resources and authority in order to level the playing field on behalf of U.S. business interests as they compete against foreign firms for specific international public contracts and other U.S. export opportunities. U.S. government advocacy ranges from U.S. embassy and consulate assistance to sub-cabinet and cabinet messages delivered through letters, phone calls, or face-to-face meetings. Typically, the Advocacy Center works in unison with the company, plays a prominent role in coordinating both the message and the medium. The Advocacy Center also works with the U.S. Export-Import Bank, the U.S. Trade and Development Agency, and the Overseas Private Investment Corporation to marshal financial support for the U.S. government, from the U.S. government, where appropriate to relevant and qualified U.S. companies. And it also has commercial service liaisons to 4 multilateral development banks to assist U.S. firms and advocate on their behalf when they compete for bank tenders. And finally, I have one more resource to briefly introduce to you, the U.S. Commercial Service Country Commercial Guides. These are reports that are assembled by the U.S. Foreign Commercial Service officers and locally employed staff at embassies and consulates abroad. And the guides outline business opportunities at individual markets, as well as other important aspects of doing business, such as visa requirements, travel advisories, trade regulations, local holidays, and customs and local staff contacts. The most recent country commercial guides for over 125 markets can be downloaded for free at export.gov/ccg. You can access more information about everything I mentioned today online at either trade.gov or export.gov. Navigating the 2 websites can be a little challenging, so hopefully this slide will provide you with a quick roadmap of key resources to help get you started, and I'm happy to take any specific questions you have. Thanks.
Thank you, Amy. We're going to leave that slide up there for just a second. If you could put that back up just so people can have a chance to either take a picture of it or get it. As I said, Amy's presentation is not going to help you sell more metal or sell at higher prices necessarily, but it's going to be the backbone of what you need if you want to enter into that export market. And I can tell you that from experience, I know that we at ISRI and individually we've used these country commercial guides on a regular basis, and it's an amazing amount of information that it brings to bear on you. So I encourage you to look at those. Next, we're going to move into the question and answer portions of our session and let you get a hold of the people sitting up here and see if there's anything that they can help you with. So I'm going to ask you to come to the microphones, and only the microphones. It's a really large room, and we would like everybody to hear the questions. So I see somebody. I can't see who it is. But please.
Okay. Well, first of all, thank you for the diversity and the excellent presentation from all the presenters. Really appreciate your input. My question, I think, is really more directly related to Joe and Adam. If you could maybe talk a little bit about U.S. and European monetary policy expectations for 2016 and how that might first affect our commodity values on copper most specifically, but then also those changes or potential changes, how they might affect the surplus in refined copper in China as well.
You couldn't have asked an easier question to get started with. It was, no, those are all great questions. I think in price determination for copper, what determines prices day to day can be anything. Over the medium term, what's determining copper prices are two things: what's going on in China and what's happening with the central banks. And right now, the central banks are headed in opposite directions. The European Central Bank continues to pump in liquidity into their markets. Right, the latest round included, I think, increasing their monthly asset purchases from 60 to 80 billion euros per month, pushing their interest rates further into negative territory, and offering extended long-term loans at very cheap rates. All those things combined, adding liquidity into the European market, while at the same time, the Fed here in the U.S. Is taking its time with raising rates, but is, again, still indicating that that's the direction they're headed in. Whether it's 2 rate hikes this year or 3 or less remains to be seen. But relatively tighter U.S. monetary policy, relatively looser European monetary policy, and loose policy in Japan and elsewhere, all other things being equal, should support and underpin the dollar strength, which has a couple of different knock-on effects. One is for dollar-denominated commodities that should weigh on prices a little bit. It also hurts us in terms of the competitiveness of our exports from the United States. A stronger dollar makes scrap from the U.S. that much less competitively priced from scrap coming out of Japan or coming out of the EU. So in terms of overseas demand for copper scrap, both from China and from other destinations, I think monetary policy is not helping us right now. In terms of what's going on in China, do you want to talk a little bit about how monetary policy is affecting local market conditions?
It's all about the dollar at this point, and it's a pretty simple equation. I mean, the dollar is high; they're going to have less interest in buying U.S. copper. I mean, it comes down to that, and they're going to be seeking out more competitive material. The other thing that's happening, and I just have this anecdotally. I wish I had data, but this data doesn't exist. But I've had several people tell me that the high dollar copper scrap, the high dollar scrap, is actually encouraging the development of the local market there. And we'd seen that anyway. It's coming. There's becoming a consumer economy, and there has been a steady uptick in the amount of domestically generated copper, and this just encourages it. I mean, it's undergirding that growth.
Right, and then in addition to that, regardless of the impacts on refined copper demand from China, we continue to see that substitution away from scrap in China and towards ores and towards refined, in part because of what's going on monetary policy-wise, but in part just because of where copper prices are. If the Chinese can buy copper ores and concentrates and refined copper at attractive prices, they're going to continue to substitute away from scrap and into those primary materials.
Well, and that's what I brought up in that slide too. Is some of those mines that we're seeing that have these very low production costs.
Right.
Those are invested by Minmetals, for example, which is a sourcing arm of the Chinese government. Those are their mines. If they're able to do production at $1.40 a pound, why would they look at scrap?
Right.
Well, that excellent question came from Padnos, from Matt Heitmeyer. If you could please tell us who you are and what company you're with.
I'm Mark Lewin with Utah Metalworks. I'm sure you're shocked to see me up here. This primarily is directed to Amy, but if there's any of the rest of you that'd like to jump in, feel free. Amy, are you seeing more, and will you talk about some of the coordination maybe you're seeing between government agencies, specifically, say, with the U.S. Trade Representative, where maybe you guys will identify problems and notify other agencies to where you can jump in, or they can jump in?
So the Department of Commerce definitely does coordinate with the U.S. Trade Representative and with the Department of State and Treasury and the U.S. Small Business Administration and across a host of the U.S. government interagency on a variety of issues. In terms of like a specific problem, I think it really depends on the particular issue. I don't know if is he referring to. Are you referring to a particular issue? Okay.
Okay. I believe there's Mr. Nathan.
Yeah. Thank you. I'm coming from France to ask my question. Thanks to the Chinese growth, we have had more than 10 years of huge demand and good prices. But I don't think we must be a dreamer, and this time is for sure over. So even if China will stay strong for the demand of copper scrap, I don't see any countries in the world we can replace the demand we will be missing for China. So what do you expect for the next 10 years, let's say, about a few countries like India, Iran, Africa, or somewhere?
You want
Who
me
wants
to
to
do it?
take that one? Adam?
I guess I'm on. All right. Yeah, Mark, I agree with you completely. I think there's different pockets where demand will emerge. I mean, I live in ASEAN now. I live in Malaysia, and I think Indonesia in particular has a lot of potential. There is going to be much more infrastructure investment going into Indonesia. So I'm very bullish on Indonesia. But again, that's not going to replace what China was. The other thing I think that's interesting, and just a quick side note, I thought it was interesting seeing the Vietnamese demand, the Malaysian demand. I think a lot of that is actually Chinese demand moving out of China into lower wage, sometimes lower environmental standard countries. And so I would be careful saying that there's real market growth there. I know just from my own experience in Malaysia, you are seeing Chinese scrap processors move down there because of the low wage costs. You brought up Africa, and I spent some time in Africa last year. I think there's going to be a tremendous Africa story, but at this point, I just don't see the demand emerging there. Mark, you might have a better insight into that than I do. I think it's going to be very hard to replace that demand in any one place. If India, if they can lower some of the barriers to getting scrap in there, and the government outlook sort of improves towards scrap, stops viewing it as a waste product and actually sees it as a resource, I think it'd have a huge boon to their manufacturing industry. But that's a government issue. It's not a demand issue. In my opinion, if the government get out of the way, I think you'd see a lot more demand. But again, you're absolutely right. I don't think there's any one market or even any combination of markets that can make up for what the China boom was.
I would tend to agree with that, Adam, and I'll take it one step further. One of the challenges I think that we're going to be facing in the future is, believe it or not, when China started to grow like they did, it was a one-stop shop, and it was fairly easy for scrap processors to understand what was going on, who you needed to deal with, how to get there, regulations, all of that stuff. So it doesn't seem like it, but it became fairly easy to get there. Now if you're talking about a plate of 10, 15 countries, and each one of them taking different portions, now it's going to be more challenging of how do you get there, who knows how to get there, how do you build the knowledge you need to move your scrap in those directions. And I think that's going to be a real barrier to entry into these new homes. And China, a lot of people think of it, China's China, but moving material to the northern parts of China is very different from moving it to Shanghai and very different from moving it to the Guangdong area in southern China or just to Hong Kong. So I think just that little microcosm shows some of the differences, but if you go to different countries with different languages and all are going to want different products, it's going to be challenging to even think about replacing China. It's going to be an uphill battle on that. Michael Friedman.
Yes. The first question I have two. This is for Joe. You mentioned that there's 659,000 tons of scrap copper going into China. What do you count as copper? Is it refined copper, copper contained, electric motors, all the above?
There are a couple different trade categories that are set up to cover copper scrap, starting with bare bright, moving through number 1 and 2 into all the brasses and bronzes. So I want to say there's probably 12 or 15 different trade categories specific to copper and copper alloy brass exports going offshore. Does that help?
Yeah. And the second question is, on a global basis, are there any mine or mill closures that have taken place or seen that could positively impact the price of copper?
Yeah, we've seen a lot of the major miners announce cutbacks in production or cutbacks in expected capacity expansion. The question is that are those cutbacks going to be sufficient to really underpin the market? And when you look at copper trading between say $4,500 and $5,000 a ton at the LME, it's probably going to take more than that in terms of cutbacks to really give some boost to pricing.
Okay, next, Mr. Taylor.
Yes, hi, Brian Taylor from Recycling Today Media Group. I guess this question could be for any of the panelists, but at previous spotlights and roundtables, there's been a lot of conversation about the role of investment funds and how it affects the copper price. And I'm curious where any of the panelists think we stand in 2016. Is the copper price pretty well based on genuine physical supply and demand, or are those investment funds and speculators, to what extent are they still playing a role? Thanks.
I'll take a swipe at it first, if you don't mind, and then maybe you want to talk a little bit about the Chinese funds, which I think are increasingly important today. Like I said, I think in the short term, day to day or hour to hour, there's anything that could be driving the price of copper, as we've seen. When copper is moving 10 cents per day on the COMEX, it's not because of fundamentals, right? And it's not because of something significant. It's because maybe there's something going on in the oil markets that's spilling over. Maybe it's because investment funds are coming in or out of the marketplace. Divergence between bullish and bearish bets in terms of money manager investments. All these things can have tremendous short-term impacts on where copper prices are. So I think day to day, it's not those long-term big picture fundamentals that drives the price of copper, as we've all seen with copper price volatility. Having said that, certainly through 2015, we saw a fair amount of exodus from the investment funds away from the commodity space into other asset classes because of the overall bullish outlook on commodities and on copper in particular. And those do have significant impacts on pricing, not just on the short term, when you see that exodus of investment funds coming out of the commodity space. I think long term, fundamentals do play a picture. It's hard to have consistent year-on-year deficits in terms of copper supply and not eventually get some sort of increase in prices. When you see drawdowns in stocks across the board, which we're not seeing, we're seeing it at the LME, but not in Shanghai. When you see the drawdown in stocks, and if we're in a deficit situation, those fundamentals are going to support prices. But that's the longer term scenario, not day to day.
In terms of China, I mean, it's I touched on this a little bit in my presentation, but China, and this could apply to almost anything in China, it's so opaque that you just don't know how active the investment funds are. One thing we do know is that, for the last 5 years, Chinese investors have been chasing returns, and of course every investor chases returns, but it's been harder and harder, and that's why the carry trade, which I discussed in my presentation, has been so critical, because it's easy money if you're able to do it. If you have the copper stocks to use as collateral to play arbitrage between dollar-denominated interest rates and Chinese ones. So how many people do that? That's the great question, and that's what the folks at Bloomberg Intelligence were trying to figure out. In terms of investment funds, I think if you talk about China, there's one other investment fund that probably you need to talk about, and that is the proverbial government investment fund. We know that the Chinese government, it has an entire department devoted to buying copper, to stocking it. In 2008, 2009, there was a program to actually prop up prices. We don't really know how much was bought there, how much is sitting in warehouses and scrappers, but it played a major role in what happened in copper in 2008, 2009, and I think into 2010. But again, it's just so opaque, and if you call around and try to find people who can tell you what kind of volumes are there, what's sitting in the warehouses, that information isn't there. So my inclination is always to say a lot, but who knows?
A question to Brian. What new products do you know of that are coming into the supply stream, and are they likely to pose a challenge or an opportunity for us scrap processors?
Well, from a challenge perspective, actually one of the most difficult items that we're dealing with today is copper-clad aluminum, and we're starting to see this more and more. Obviously, it's not magnetic. You can't detect it other than by physically grinding off, or sometimes you can tell from a weight perspective, but if it's intermixed with regular bare bright copper, and we're starting to see that from a quality perspective as a significant challenge. Some of the good areas that are happening within the copper industry, copper's an amazing metal in that they keep finding new uses, new adaptations for copper, and as much as there's threats of substitution, the good news is in a lower market that talk lessens and becomes a little less background noise. But specifically, I wanted to mention the medical industry. Europe and Canada are way ahead of us, but the U.S. has already approved from an FDA perspective that copper is highly effective at killing the staph virus, 99.9% within the first hour of contact. And as they look at opportunities to commercialize copper within that industry, there may be significant opportunities as well.
Now, when you say stop, is that a physical use of copper, or is that just copper being used instead of some of the other surfaces that are currently being used?
Yeah, it would be actually, the positive news would be positive substitution, meaning copper would go in place of stainless steel, for example, in IV pans and bed frames, etc. So copper killing the staph infection. They just have to figure out the right alloy and how to commercially deploy this, and it will happen over time. There's an economic value that they can place on avoiding staph infection. So it actually comes down to dollars and cents, and it will happen over time.
And I guess the final question to all of y'all is would be that is today's marketplace really the worst in the last generation, or is this a blip? Is it still in the process of going?
You've been pessimistic. Why don't you go ahead?
Worse in a generation. Well, it's worse than 2008, 2009, and because the issues are long term. And looking back now, 2008, 2009, set off a lot of this. The Chinese spending, the deficit spending, the incurring of debt. So we're unwinding 2008, 2009 at this point. My own outlook is I'm very long term. I'm very bullish on China. It may sound like I'm talking about China. It's just they have the economic problems in China are political problems, as they are everywhere, and they have to work out where these people in these state-owned companies that are generating all this capacity are going to go. Once these problems are worked out, once that economy is restructured, I think you're going to have a very positive China story. It's a question of when. My own feeling is you're probably talking 4 or 5 years out. It's
Brian,
tough.
you've been around 100 years. Your company's been around for 100 years. So what do you think?
There are definitely some structural issues in our industry at this point, and that's clear and obvious, and it stems from China. In my case, we do very little export. Most of what we produce is very high grade and is consumed here in North America, but obviously we're impacted every single day, and it's a backup in the system such that the consumers that are here in North America that are remaining are full. Everybody is scrambling to try to fill those homes, and so there's not as many opportunities to market your scrap. On the supply side, it's also difficult because the decline in manufacturing that we've all experienced and know firsthand in North America, and not to mention that, so smaller numbers, they're better at what they do. They make less scrap as a byproduct with programs like Six Sigma and lean manufacturing. They generate less scrap. So there's definitely some structural challenges. I don't think it's the end of copper scrap as we know it, of course, recycling. It's just a low period, and there will be improvement to come for sure.
Joe, what do the charts say?
Well, I thought it was interesting in the Ferrous Spotlight yesterday how one of our analysts was saying that steel prices in the U.S. in 2015 were actually lower than during the depths of the financial crisis in 2007, 2008, 2009. And, I think that tells a lot about the health of not just the steel industry, but the metals producing industries in the U.S., but scrap as well, because the health of our industry is, of course, closely connected to the health of manufacturing, and manufacturers are kind of struggling right now. There are some pockets of support that I've talked about, including construction starting to look a little bit better in the U.S. Light vehicle sales continue to run at a healthy clip. But there's a real disconnect, I think, between the macroeconomic figures that we see for the country as a whole, what's going on within manufacturing, and then finally what's going on with the health of our industry, which, as you've heard, has probably been about the worst that we've seen, certainly in decades, if not a generation, due in part to that consistent downward-facing trend in terms of pricing since 2011 at least.
Okay, well, wrapping up, I'd like to put back up the slide with our panelists. We're going to put up their names, their company names, and their email addresses. There was a misprint in the bulletin. I do not work for Goodland America. It's Greenland America, and my thanks to the owners of the company in Greenland America for allowing me to participate at the level that I do within ISRI. Any final thoughts going down the panel? Amy? Okay.
Nothing to add?
Adam?
Fine.
All right. A bevy of information. Michael? Michael Bryan.
Just thanks for the opportunity to present today. I certainly enjoyed it, and I was laughing to myself that in 100-year history it took 8 minutes to recap that, but I enjoyed it very much, so thank you.
Okay. Go ahead, Joe.
I'd like to say thanks too, and thanks for everyone for sticking around to the end of the spotlight. We appreciate it, and just to bear in mind that we talked about what a terrible down cycle this is, but it's it's not the end of the world. All these cycles come to an end, so you just got to hang in there. Thanks.
Thank you, and have a good day. Exhibition hall is still open today. Please go have lunch in the exhibition hall. Just opening right now.